Welcome back, financial enthusiasts. Today, we're diving deep into one of the most talked about companies in the athleisure market, Lululemon Athletica Inc., ticker symbol LULU. Stick around as we uncover some fascinating metrics and what they mean for the future of this popular brand. Let's get started. First up, let's talk about the price-to-earnings ratio, or PR. For the trailing 12 months, Lululemon boasts a PR of 24.38. Now, that's interesting because the average PR over the last 5 years was a whopping 51.48. It seems like we're seeing a more conservative valuation lately. But what's really exciting is the forward PR, sitting at just 20.07. Investors are expecting growth, but at a more reasonable price point. Next, we have the PG ratio, which stands at 2.08. This metric tells us that Lululemon's stock is reasonably priced relative to its earnings growth. A PG ratio above 1 can sometimes indicate that a stock is overvalued, but considering Lululemon's growth trajectory, this isn't necessarily a red flag. Insider ownership is another crucial metric, and for Lululemon, insiders own 12.47% of the company. This is significant because high insider ownership usually aligns the interests of the management with those of shareholders. It shows confidence in the company's future. Continuing with the return on equity, or ROE, is a staggering 41.94%. This tells us that Lululemon is very efficient at generating profits from its equity. It's a strong indicator of financial health and management effectiveness. Equally impressive are the return on assets at 25.5% and return on invested capital at 39.52%. These figures show that Lululemon is not just using its equity well but also its overall assets and capital. This kind of performance is what sets great companies apart from the good ones. Moving on to earnings per share, or EPS. Lululemon has an EPS of 13.04. Over the next 5 years, analysts expect the EPS to grow at an average annual rate of 11.7%. That's some solid expected growth right there. And speaking of growth, over the last decade, Lululemon's EPS has grown at a compound annual growth rate of 23.94%. Even more impressive is the free cash flow per share, growing at 29.53% annually. This shows that Lululemon has been generating increasing profits and cash flows, underpinning its strong financial performance. However, one thing to note is that Lululemon does not currently pay a dividend. So if you're looking for dividend income, this stock might not be for you. But that's often the trade-off for high-growth companies. Now, let's talk about margins. Lululemon has an operating margin of 22.9% and a profit margin of 16.09%. These margins indicate that Lululemon is not just generating revenue but is also quite profitable. Revenue and earnings have also seen a very positive evolution over the last 8 years. However, despite this growth, Lululemon's total return over the last 5 years has been lower than that of the Vanguard S&P 500 ETF, VOO. Debt-wise, Lululemon is in a healthy position with a debt/EBITDA ratio of 0.53 and a debt/free cash flow ratio of 0.84. This means the company isn't over-leveraged and has enough cash flow to cover its debts comfortably. Despite all this strong financial performance, Lululemon's stock price has been down 10.2% over the past 52 weeks. But don't let that discourage you. With a market cap of $39.73 billion, analysts predict a price of $405.47 in the next 12 months, which represents a potential upside of 27.56% from its current price of $317.86. Personally, I believe the fair value is closer to $308.43, which is still very close to the current price, suggesting that the stock is fairly valued at the moment. In conclusion, Lululemon Athletica Inc. shows strong financial health, impressive growth metrics, and a sound future outlook. Whether you're a current investor or considering adding Lulu to your portfolio, these metrics provide a solid foundation for making an informed decision. If you found this video helpful, make sure to hit that like button and subscribe for more detailed analyses on your favorite stocks. Until next time, Happy investing!